I think a lot of it is that investors don't just invest in ideas, they really focus on investing in people. What's your narrative? What brought you to this point? Are you charismatic? Can you bring people with you? And also, are you the kind of person that can think on their feet, make decisions very quickly?
So founders are more pragmatic, I would say, especially in Taiwan. Founders are very much bottom line driven, trying to actually save money, versus in the US, you have a big vision, ambitious scaling potential, great marketing stories. The Europeans, very focused on sustainability, structured, compliance driven. So there are distinct differences between Asia, Europe, and North America in terms of how startups pitch and present themselves.
Hello and welcome to Connected. I'm Susan Chow, sitting in for Divya Gopalan. Amazon's Jeff Bezos says he pitched to 60 investors in order to launch what is now the world's largest online retailer. Of those, 22 angel investors said yes, putting in a total of $1 million of seed money. That was 30 years ago. Nowadays, founders are known to go through more than 100 pitches in their startup journey, but only 1% of pitches succeed in acquiring any funds. To help us navigate this journey, we're joined in Taipei by Volker Heistermann. He's the co-founder of Mosaic Venture Lab, as well as managing director of Yusan Ventures, which has advised firms such as Audi, Google, and Microsoft Innovation. And joining us from Singapore is Bill Padfield. He's the founder and CEO of Salamander Advisory Services, advising venture capital funds and tech startups. He has previously led companies listed in Singapore, New York, and Paris. Volker and Bill, thank you for joining us today. Volker, you have served as a panel judge at various pitch contests and demo days, including Innovex, the startup exhibition here in Taipei. What stand out most for you in terms of the pitches that you see?
Yeah, Susan, great question. I have seen startup pitching since 2006 when I worked at an investment bank in Silicon Valley. And I would say the best pitches are crystal clear about three things: problem, solution, and market opportunity. And also important is to balance the vision with execution, but more importantly, we look at founder confidence and adaptability. If the founder is not able to convey a convincing pitch, how can the founder convince customers or his team to actually acquire the product or work with the product?
And Bill, what are the different requirements, in your opinion, for pitches at various stages of the startup journey?
It's not just one startup journey. Obviously, there are different stages which are pretty critical. So if it's early stage, looking at pre-seed or seed rounds, there's a real focus on what problem you're trying to solve. And I've seen meetings just stop at that point when startups are very vague about what they're trying to achieve. So it's about the problem they're trying to solve. It's about the team, the strength of the team, and it's about the initial traction that the business may have in the marketplace. And then the next stage is really when the business is growing and they're going through the product market fit stage, which is Series A, Series B, slightly later. And this is where it's all about the scalability of the business, scalability of revenue, and also the market expansion, either domestically or internationally, whichever they're trying to achieve. And then the mature stage, where it's Series C and later, is really about the financial performance, operational efficiency, and really for the investors, it's what is the exit potential, either through IPO or institutional sale or some other exit.
That really sounds like a lot goes into it, and then such an orchestration of so many different components. Volker, what do you think makes a perfect startup pitch, or is there such a thing?
There certainly is, and you can Google it, the perfect pitch, and there are hundreds of successful decks that serve as a good model. But of course, every startup has their own solution and product and needs to be adapted. But the perfect pitch really encompasses some existing traction, and like Bill had mentioned, a team. It's all about, especially in the pre-seed and early stages, about the team and execution. Can this team execute? Can this team deliver? And what a lot of founders forget is the importance of rehearsing. I think Steve Jobs, who I had the pleasure of seeing many times in the Bay Area when he was presenting, he was known to rehearse for weeks prior to his keynotes, everything to the ninth degree. And that is something that startups really need to improve on, especially startups that pitch in English, but English is not their first language. Also, often in Taiwan, I see, and this is sometimes depending on founder egos, that they don't necessarily let one of their employees pitch, and I'm not just talking about VC pitches, but also about corporate pitches. We work a lot with large corporates like Audi, you mentioned, and Continental in Germany and other multinational companies. And then their engineers sometimes would like to talk to an engineer that sort of speaks their language, not only on the engineering level, but also from an English perspective. And so often the ego gets in the way, and then the founder that doesn't speak English so well still needs to present, and that is usually detrimental. And then it doesn't go anywhere.
These are some really good advice, and I hope people can pick up from that. Bill, how has the shortage in venture capital funding changed how investors evaluate pitches?
Yeah, it's been a tough couple of years for sure, and some are even calling it a funding winter right now. But there is still a lot of dry powder available with the investors, but it is certainly a lengthier process than before. I don't know how it is in Taiwan, I'm afraid, but in Southeast Asia now, it's at least 6 months from first contact to cash in bank, which is almost double what it used to be 2-3 years ago. So companies are presenting their stories to the different funders, and your comment earlier about Jeff Bezos doing 60 pitches. My reaction was only 60, because at the moment it is certainly a lot more than that. And the challenge is trying to understand what an investor is looking for. So part of the work that we do is helping companies with the narrative, not just the internal narrative or the client narrative, but it's understanding the investor narrative. What's the taxonomy that investors use? What are they looking for? What are the trigger points? So there's a lot of coaching goes on, and also to ensure that they're very succinct to the point and bring a message across in almost a formula, which is, in our case, we like 12 slides, 20 minutes, 10 minutes for Q&A, and that's it. So it's all about practicing the story over and over again until it almost becomes muscle memory. And as Volker said earlier, it's not just the founders, it's the rest of the team learning how to communicate, because those magic moments may happen in an elevator, it may happen in a hotel lobby, it may happen wherever. And particularly in places like the Valley or in Singapore or Hong Kong, wherever, you never know when you're going to run into those investors, and it's terribly important you understand the pitch.
I'd like to show our audience a graphic that outlines the key components in most startup pitch decks. Here you see they start with a unique value proposition, building up to the founder's vision and business plan. The structure is fairly standard, and most will recommend around 10 to 12 slides for the pitch deck. But the challenge lies in how the narrative is crafted and the finer data and details. Volker, you collaborated with Taiwan Tech Arena to hold a boot camp for startups here participating at the Las Vegas CES exhibition earlier this year. Can you give us a sense of what that was like?
It was exciting to have these 50 plus startups ready to go to Las Vegas to CES and showcase their capabilities. And we had brought in from Stanford University, a lecturer, an ex-Google employee, a former colleague of mine, and some other mentors from Taiwan and from really Silicon Valley investors. So it was a very nice spread of talents from the mentor perspective and the sessions we ran. And what was very apparent is that in some cases, the startups should potentially reassess if they really need to go to CES or to a medical convention. So not every startup, should go to CES. I think that's the first checklist, or when you attend an international trade show, is it really a fit for you? But then on a more tactical level, what we assessed that the Taiwan startups are very, very technical, not enough business focus. And What was lacking in, I personally reviewed 50 pitch decks, and every single of these 50 pitch decks, even with one company that raised money from Sequoia in the past, they actually had no mention of the US market. They did not address the US market and the local strategy, all right? So if you go to the United States, you want to actually participate and show the investors or business partners that you're serious, you have a team there, you're going to establish a team. And then Taiwan startups often tend to undersell themselves. That's definitely a Taiwan problem if you compare that with US startups, right? They're all about marketing. And often the differentiation is weak, so it could be much, much stronger. Those, I think, were the points that were standing out the most. But the enthusiasm is there, the excitement, but it takes a little bit more of preparation time, I would say, than just a month to get ready for CES. That was also something we assessed, that some of the startups, should have launched a PR campaign not a month before they go, but 2 or 3 months before they go.
These are very, very valuable feedback. I'm sure it's very appreciated. Bill, I'm sure you see a lot of pitch decks as well. How often do you see a great business proposal that perhaps may have lost their chance because of a bad pitch? Or on the flip side, a really good pitch, but a bad idea?
Boy, there's a lot in that question. And if I can just go back and answer a little bit more on your previous question, that right now people want to understand a lot more about the traction of your business, a lot more in the due diligence process, understanding more about the financials than ever before. They also want to do a lot more technical due diligence as well, and understanding how much you can defend your business once it scales and grows. So there's an awful lot there that I should have added. As far as good and bad pitches, this is something that I still struggle with. I have to admit, I've seen examples where 2 pitches look almost identical, similar businesses, very clear problem they're trying to solve. Fantastic leadership team. This is not their first rodeo. They're going around doing yet another startup. They understand the game. They've got a great business plan and so on. And on slide 3, a general partner of a venture capital firm is saying, great, let's get on the whiteboard and talk about how we could set the terms for the term sheet and so on. And on the second pitch, the guys are shutting the meeting down on slide 3 saying, thank you very much, we'll call you. And I'm still trying to understand what it is that these guys see. So a lot of it is instinct and experience on behalf of the venture capital guys. They understand some of the moments that make a company successful. And a lot of it's touching on those points that Volker talked about earlier, which is, what does the founder come across as? Do they sound credible? Are they action-oriented? Are they going to keep going when they face challenge after challenge after challenge? Do they really understand the business? Do they give me a comfort feeling? Did I notice them when they walked into the room? Were they somewhat charismatic? I know this is very hard to quantify, but those are the kinds of things that will make a successful pitch or a similar technology actually fail through a pitch. So it really is worth practicing on how to tell your story.
Yeah, it sounds like that charisma has to really come through in these pitches. Volker, for startups from Asia compared to those from Europe or the US, how do cultural nuances play a part in how they sell their ideas and ask for money?
Yeah, for the startups, on the startup side, it's clear that Asian startups, Taiwan startups, are a lot more focused on execution and technical validation, right? They have a strong engineering background, and that is just also driven by the school system, which is a lot more rigid than education in the US and especially in Europe. So founders are more pragmatic, I would say, especially in Taiwan. Founders are very much bottom line driven, trying to actually save money, versus in the US, you have a big vision, ambitious scaling potential, great marketing stories, and you just saw more recently in the news DeepSeek versus OpenAI, and DeepSeek being able to accomplish a lot more with less, where the US startups are just enjoying higher funding rounds at higher valuations traditionally, especially in Silicon Valley. So the Europeans, very focused on sustainability, structured, compliance-driven. So there are distinct differences between Asia, Europe, and North America in terms of how startups pitch and present themselves.
So many things to take away. So Bill, what is your advice to startups pitching to investors? If you had to lock down to 3 do's and don'ts, what would they be?
Okay, so there's a number of challenges. Number one, just extending that point earlier, is engineers and scientists are not naturally brilliant presenters. They may be brilliant engineers, they may be brilliant scientists. So getting them to tell the story in a way that really communicates is terribly important. So one of the do's, I would say, is really focus on your business itself. The days of high growth, high cash burn businesses are kind of gone. And that was the era of free money. It's much harder to raise capital now. There is capital still out there, but it's very hard to raise. So you want to show things like strong unit economics in your business. What's the customer acquisition cost or client acquisition cost? What's the lifetime value of your clients? What's the gross margins in your business, for example? And how are you going to control the cash burn rate in the business? So it actually comes down to a lot of details very quickly. And they want to understand, are you going to become cash flow positive over a period of time? And therefore, it's not profitability in the early stage. It's all about cash. Are you going to turn a cash burn into a cash generation model? And then the other one is, how are you going to maintain your competitive differentiation? What's the moat to protect your business to enable it to scale? Those are the sort of 3 things that I would suggest. I'm sure there's others. And then 3 things that I would suggest you don't bring up is your these charts that are constantly showing that when you give me money, I'm going to grow tenfold. Most venture capital firms or private capital firms would discount those numbers from the get-go, and yet it's terribly tempting for people to say, look, you give me money, I'm going to grow tenfold overnight. The second one is please don't ignore that cash efficiency and that burn rate. It's terribly important to investors because they want to know whether we're going to, in a few months' time, few quarters' time, come back and ask for more cash, and therefore it's not going to be terribly popular. And then I would say as the last one is, don't overlook your ability to execute and the strength of your team. Those are 3 areas that you must bring into the conversation and don't neglect to emphasize. I'm sure there's a list of others, but those would be mine.
Next, we hear from Yusan Lin. She's a computer scientist, former model, and founder of Mirror AI. Her generative AI fashion startup in the US Bay Area is preparing for its pre-seed funding round. She offers her insights on the founder market fit and pitching resources that founders can access.
For example, in Silicon Valley, there are these quirkiness in founders that investors often look for, and it might actually just be a personality trait of someone who's like less conventional or just a little bit different. It seems super genius, super smart. But another one more standard or common is having the know-how of how to solve the problem that you are solving right now from your past experience definitely is increasing the founder market fit for someone. What I found the most useful is actually know the people in the network, actually in the startup scene, ask other founders, ask investors, and just ask for multiple iterations, send them your pitch, and they will give really harsh and real and honest feedback. And also request from founders their past pitches and also their pitches with the previous investors' feedback. Also practice pitch with investor friends or investor that might be potentially interested, and also other founders that are a few years ahead of you.
Bill, investors often look for intangibles in business, especially founders' qualities, as you both have mentioned. What can founders do to prepare for that X factor?
Oh boy. I'm on the board of a company in Singapore, and the founder there has always said, when I go to investors, when I ask for money, I get advice, and when I ask for advice, I get money. So part of it is your approach in the way that you go into the investor community. And I think to follow up on that comment earlier, I think that doing your research is terribly, terribly important. Understand who you're talking to. Don't just go in there cold. Understand about the fund, understand whether, or the firm, whether it's fund 1, fund 2, fund 3. Do they lead rounds? Do they like to follow on rounds? What's their check size? What's the verticals they focus on? And speak to some of their companies that they've invested in. Normally, they're quite proud of putting them on their website or whatever. So do your research before you actually go in and pitch to the VC firm. It doesn't mean you're guaranteed success, but it does mean that you're reducing the risk of failure. I think part of the X factor, as I touched on earlier, is very hard to quantify. But I think a lot of it is that investors don't just invest in ideas. They really, really focus on investing in people. So standing out, being slightly different, as the lady kindly identified, I think is important. It doesn't mean you go in there acting like a lunatic, but it does mean that you want to have your personality come through. You'll be finding that the VC guys will be very interested in your own personal story. What's your narrative? What brought you to this point? First of all, is this your first startup? What was the trigger point to have you want to do this startup? Why are you so determined that this is so successful? What kind of safety nets have you got? If it fails, are you going to go back to a corporate role? Why are you here, and why are you telling your story? And I think a lot of it is based on your ability to execute, your ability to lead. As I said earlier, your ability to light up a room. Are you charismatic? Can you bring people with you? And also, are you the kind of person that can think on their feet, make decisions very quickly, rather than having to work with others as a democratic process? You've got to make decisions on the fly. And one of the things that I've always done with my companies is I may be wrong, but we're not confused. We're going over here. So let's take a direction. And if we've got the direction wrong, let's pivot, And it's kind of things like that you look for in these entrepreneurs.
Volker, do you think there are natural born founders?
Absolutely, yes. I always like to use the post office clerk without looking down on them, but they're very important in our lives. But if you want to sit there and stamp all day, you're just not going to found a startup. However, failure is something that is very important. I always like to say investors love to invest in startups that have failed before, into founders that have failed before. And why is that? Because somebody else paid that price tag by losing their money on teaching them new skills, right? So it's a journey. 90% of all startups fail, and most startups are not successful, or most founders are not successful the first time around. So certainly there are certain skills that can be acquired and are being acquired, but it takes a very, very fundamental persona that is willing to ride roller coasters, the ups and downs, the founder depression, like the highs, and the opportunity to become incredibly wealthy. I'm not talking about rich, I'm talking about wealthy. You talk about greedy investors, but startups, should also have this big goal, because that's when they dream big, and that's how they attract investors that can help them scale.
And Bill, your work with VCs and startups covers Singapore and other parts of Southeast Asia. Do different markets have varying pitch demands or customs?
If you look at investors in Singapore, one of the things they like is regional scalability. How fast can this business scale across Southeast Asia rather than just the small domestic marketplace here? Other countries like Indonesia and Thailand, they've got big opportunities for domestic growth, particularly Indonesia. And a lot of startups there, their aspirations for growth are purely domestic. You've got language challenges in both Thailand and Indonesia. So they're somewhat restricted to the local domestic marketplace. If you look at Malaysia and Singapore, they also like to have data-driven pitches. They like to have it very well structured, whereas some of the other countries in Southeast Asia, they want to know how well you're networked. Have Have you got regulatory compliance underway? Do you really understand the regulatory environment, particularly if it's in the space of financial services or fintech nowadays, or even AI to a certain extent, generative AI? There's a number of restrictions. So each country is slightly different, and you'll find that the venture capital firms in these countries expectations are slightly different as well.
Volker, you mentioned a main focus of your ventures is on the automotive and deep tech sectors. Same question, but are there pitching variances across different industries?
Oh, absolutely. Automotive likes to see partnerships. If you look at SaaS consumer, you want to have traction, downloads, viral effects. If you look at deep tech, you look, of course, just like for automotive, at the IP. You look at patents that have been filed, and a hint for founders: a global patent, costs you $10,000. I met a startup recently from Japan. Pre-seed, they have a $500,000 a year patent portfolio they have to manage, and they spend every year $500,000 in managing the patents. That's pretty extreme, because if you have a company like Meta or Google, frankly speaking, that is interested in what you do. Either they acquire you, or they may even, hire their own lawyers. And how, as a startup, can you defend your pending patent against these giant companies, the Samsungs of the world, right? So patents are important, but they're not everything. Again, patents are important, but yeah, so depending on the industry, you need more or less of that. And in some cases, you need more traction, more early stage revenues. Semiconductors, something we're investing in. Of course, you have a much longer leadway until you actually see profitability and first revenues. So very much industry dependent. Good question.
Bill, this question I think our audience would be really interested in knowing the answer to. As you know, startup founders usually work under a constrained budget. What are some budget-friendly resources founders can access that may help them deliver a sound pitch to investors?
I think there's lots of ways that you can get information. Start with Google, for example. Just do your searches. There's lots of different forms of pitch decks available out there. There's lots of websites that will help you practice pitches and so on. But there are also many areas where you can get information from and learn the way to do it, such as incubators with the universities in the different countries. You've also got accelerators, which are professional organizations that will take you through a training program, how to actually tell your story, how to pitch to investors, learn the taxonomy, and so on. So there's many ways of doing it. This is something that we also do for a lot of people that are looking for guidance on how to tell their story.
Thank you. Bill and Volker, it's been a pleasure having you both on the program today. And for our viewers everywhere, I'm Susan Chow. It's been good to have your company. If you like today's show or have anything to add to the dialogue, join the conversation on our social media. And remember, stay informed, stay engaged, and stay connected.